Okay, so today, same shit, but I'm just going to go through what I was looking at yesterday. And as you can see, all of this is just a six sister trading, okay? All these are all the executions, and because I did not get to record my whole trading session, I recorded the wrong screen. So I just thought that this was something that I wanted to post anyways. Just study. So just gonna go through what I was looking at and stuff. Basically, just want to show that all these are executions, okay? All these are trade executions, and yeah, it might be ridiculous for one to review and even keep on track on his demo account when you're trading real life funds. But to me, you know, usually when I was trading the demo account, I did not see much money. I did not see much. I did not even see much profits because I was just trading to see, like, oh, just put the trade there to see what happens. But then when I decided to trade the demo as if I'm practicing my model, the profits basically turned to like that. So from losing money to like that and not risking more than $40 per trade. So basically what I was looking at is, okay, yesterday. Today's it's a market holiday, so market's not open. So basically what I was looking at is, first we have this new day opening gap, and then during 18th of June, price rallied up, make a Judas swing, then left the overnight liquidity and London high. So London high was taken again. This is London high. First sell side was taken, failed to reach sell side, but reached the new day opening gap. Then price used it to trade higher into inversion fair gap into a premium. Then Judas swing during 9:30 takes out London high, takes out midnight opening range low, trade back into this BC, traded to the new day opening gap, and took out this pre-market sell side. So you can see right here, pre-market sell side. And then price trade higher, and that was where I'm basically going long for, trading into this 15-minute CB, and that's pretty much the high of the day. And price just melted lower. All this I couldn't care much. Just gonna talk about everything that is salient to yesterday's practice. So 5 minute BC, what's this? 5 minute when share to share is a when. So this is a balance price range, and then this one price traded above it, close above it. We want to see this CB act as an inversion, and because we have this wick inside also, so we can assume that that wick high until the CB low, CB high, this candle's low until this candle's high. That's a balance price range, and we can see that no bodies in it respected the 5 minute CB very beautifully. Then expand higher, take out London high. After the midnight opening range low is taken and pre-market low is taken. So pre-market low we aim for pre-market pre-session high first, which is this. Then we'll look for this midnight, and you can see that it tags both level perfectly. And going down to a 1 minute chart. Okay, this is basically trading in the intraday volatility. So what I did was basically this. You can see pre-market sell side taken. So all this was a market maker buy model accumulation, second stage accumulation, then distribution, second stage distribution, and just trade higher. This is opening range gap midpoint. You can see that the midpoint was used here to send price higher. Then the upper quadrant was used here. So basically, once I was looking at actually prior to 9:30, right here, there's a very nice short opportunity to trade pre-market right here. So you can go short here, which is what I was looking at because we did clear out the 8:30 highs right here, and bodies was inside of the previous 2 weeks. Monday first presented fairly gap, so trade lower, use this volume imbalance, use this emergent fairly gap, just trade lower because we have a discount. We open in a premium, so just stick for discount. And then trade right here, 9:30 to 10:30 is where we expect the low to form, especially when we have a new day opening gap and the yesterday's first presented fairly gap plus 13th of June first presented fairly gap. So multiple confluence that makes sense for me to anticipate that is the low of the day. So we have pre-market sell side taken within the new day opening gap of 17th of June. Then this is the first presented fairly gap after sell side is taken. Okay, so right here, actually I did enter here. You can see that I will use this as an inversion to enter. Can you see that small arrow here? So, and but risk was a bit overzealous, so that's why I got stopped on the balance. But then I enter another trade going long here because it's still in the low risk region. So going along here inside of the first presented fairly gap on top of the new day opening gap. Very nice. That's why went long there. Okay, all these trades risk less than $40. Okay, so just went long here. Then second trade risk here, so it's less than 20 points. Then price just started trading higher, close above of the first presented fairly gap, and then once bodies are above it and above of the O 13th of June first presented fairly gap, once the expansion and price did expand right here, that's why here was the lowest hanging fruit target. So nice 50 points right here, but I just took it here because we have a volume imbalance right there. So that's why you can see I just stick at the when it traded to the volume imbalances. So because only have one contract, that's why low hanging fruit. Yep. Then later retrace. I thought that price want to go lower, but it did want to go lower. It sure is a very nice shot, but if you should take trades like that, you want to be very nimble, so you can just take profits here. But I just shift the stop loss, so it was a stop out in the balance, better than break even. Then since here is where price traded to the 5 minute parity gap, so that's a BC, a silver bullet in the 5 minute, so that is a confluence. And then we did take out maximum carnage is already done, and we haven't back buy side, so chances are it's going to come back here just to engineer more buy side and take out who that was lucky enough to follow on this trade. So people generally throw their stop loss and above all low, and there we take it. There we go. Took it, all low, right to the tick, traded right to the tick, then expands higher. So this to me is a balanced price range. That's why I use this to enter because it is a measuring gap towards 2280. Actually 2265 was this one. Sorry, 2265. But I six sister target was here, but low hanging fruit is here because we have the O, we have the yesterday's first presented value gap. So yep, silver bullet, expecting it to be a measuring gap also. Can see that I went long here. Can you see the arrow right here? So I went long there. Then I want to see a swing low. Swing low was presented. Then price traded higher, market structure shift. Then we have a CB being used as an inversion, then trade higher, breakaway gap, breaking away from this measuring gap. And then here, volume imbalance, small CB, trade higher, and then eventually reach to the big level target which I was looking at. So all these are just scalping and trading the market maker buy model. Well, I wanted a short here as well, but anyways, this is all market maker buy model with narrative, with logic, and with time. So as you can see, yep, and this is scalping just the intraday volatility. No doubt it was quite a nice um, low resistance run, not so high at least. So just wanted to show you guys, yeah, just want to see like when price was trading here at the ID. To me, this is my last line of defense. The propulsion block, red candles, all should start holding price. And this was the six sister idea I was looking at, which is a 2265 level because ES already took it way before Nasdaq did. So as long as Nasdaq, as long as ES stay above the high, we can expect that Nasdaq to pan out the same thing, the same high already taken. So as you can see, traded 950 macro, just shorting there. Just and you should take a low hanging fruit at the 5 minute BC actually. And yep, you can see my initial target is hit, and this is way before everything pan out. This is where I went long. So no doubt it's just a demo study, but seeing how I'm able to read price right now and following the model and making such doing such thing that makes my demo so profitable right now. Just risking over $40, but you see there are incurred loss on the same day, but on the same day you made back all the loss and and more profits. So right now my demo account is up. Means following my model ever since I decided to use demo to practice my model. You can see that from losing money right now to a profit of $600, and I was trading all based on the $4,000 account. So based on the $4,000 account, that's probably a 15% profit. So yeah, the model works. It's all just following the model, and you can see everything was outlined beforehand, and it was just trading intraday volatility with logic and stuff. So it's very satisfying to be able to read price and trade right now like that. And one day I'll be very comfortable to trade it with live fun. And yeah, so a very good study. original consolidation inside previous 2 weeks, first presented fair gap, then drops down. So I actually did back test it just to show you. Yeah, so this is details of a market maker buy model that I outlined beforehand with time, then only price like 950 macro to 1010 macro. And here right now you can see that this is the trade that I missed. And definitely it's something I intend to practice more. The practice more, build more conviction, then one day I'll be able to use it on my live fund trading. And you can see that all the candles haven't panned out. So it is all like as if I'm telling the future. So overall, very good study. Yep. So that's it for this trade review.